rates has yet to come. Meanwhile, Federal Reserve Bank of New York President John Williams also said, eventually we will have rate cuts. But for now, monetary policy is in a, quote, very good place. Join me now, right now, live from the Milken Institute Global Conference here in L.A. is former Council of Economics Advisors Chairman and Brent R. Nicholas, Distinguished Fellow in Economics at Stanford University. Hoover Institute. Kevin Hassett back with me. Kevin, it's great to see you.
Great to be here.
So I want to get your take on all of this. It sounds to me like now the Fed is messaging out, forget the rate cuts.
Right. Yeah, the Fed's not going to be able to cut rates this year, but they're also not high enough. If you look at the inflation data, then the last 3 months are running almost at 5%. And the fact is that the Fed needs to go up from here, not down. And they're kind of in denial about that. And one metric of it that I see really strongly in the data is that union wages, all those contracts they negotiated last year, kicked in first quarter. And so year over year, wages for unionized workers are up 6.5%. And so the firms that gave those big wage increases to workers are going to have to raise prices, right? That's a wage price spiral. We're in the midst of something we totally understand, and yet the Fed seems not to. And they're going to leave rates where they are, and inflation's going to go up to 4 or 5% this year.
Do you think that there's a threat that the Fed could raise interest rates?
Yes, there is. The data will be that bad.
Jim Grant told us back in March, and he was spot on.
Jim Grant's always spot on, right? But the point is that, yeah, the Fed is going to look at the data, and then by June or July, they're going to see they've lost control again. It's just almost exactly like a corollary of saying it's transitory. Saying that we're in control, we're high enough now when inflation is running right about at the interest rate, and we've got this wage price spiral going on. It makes no sense.
Don't you think that's going to be a major disappointment for the stock market? Will we see a sell-off in stocks if, in fact, we see a rate hike?
Yeah, probably, yeah.
Let me get your take on the macro story. The consumer credit report out later today, and economists are expecting that credit is going to rise to $15 billion. The preliminary reading of the May consumer sentiment out on Friday. Your thoughts on the macro story, as the headlines look good, but even the Journal is reporting that consumers are fed up with the high cost of food. They're ditching big brands as a result. They write restaurant chains and some food manufacturers are reporting sliding sales or slowing growth that they attribute to consumers' inability or refusal to pay up for prices.
Right. So consumers have been borrowing to the max on their credit cards, and credit card interest rates are really high. Like, I don't know, it depends on your credit rating, but you're paying 25 or 30% as an interest rate on your credit card, and you're almost maxed out. And so you can see in the consumer credit data that people are hitting the end. It's Thelma and Louise driving towards the cliff. And so I think that consumer spending is about to really hit a wall or hit a cliff.
But here we are in an election year. There will be moves that this White House will likely take to make the story better going into the election. Do you agree with that?
I don't know if there's much. I don't know if there's much left they can do. The thing, though, is that
can they get oil prices lower?
No. Not at all, but the left-wing media can pretend it's nice, and I think that's probably what's going to happen, is that everybody's going to say inflation's under control, oh, look, the economy's not so bad. I think that's the kind of thing that we're going to see.
Well, oil is the underlying issue in some cases in terms of inflation, and it's elevated, although it has dropped below $80 a barrel. What's your expectation for oil?
Right. It depends on the global economy, and so if Europe is weak, which it is, it's almost in recession, then that lowers their demand for oil, and it can make us get a little bit ahead on the price of oil. So I would guess that you're looking at $70 a barrel by the end of the year, something like that.
I mean, the macro story has been slowing quite considerably. You had 4.9% growth in the third quarter of last year. Now we're down to 1.6% in the first quarter. Do you expect it to continue to decline?
No, I think it'll stay about where it is right now. But the big risk, the outlook for me is something I've never seen before. That I really think if you look at the case in New York, that the judge is being so undemocratic, unconstitutional in his rulings against President Trump. It really looks like there's a conspiracy to put him in jail, to put him behind bars. And if President Trump is in chains going to Rikers Island, then would you want to buy a U.S. Treasury the next day? The thing that I'm really worried about short-term risks for the economy is that the Democrats are serious in this lawfare, and if they actually succeed, then imagine it's like we become a banana republic the moment they take them to Rikers, and I just can't imagine what happens to Treasury markets that day.
Wow. So you think if that actually materializes, markets will take notice?
Markets will take note, and it'll be one of the bigger market effects that we've ever seen.
And you think what? Yields will...
Yeah, that go way up, and equities...
And stocks will go way
down.
Yeah. That's a really important insight. You're right. I think that people will look at that as a symbol of a changed America.
Right. If you're a Swiss investor and you're thinking, should I buy a U.S. bond, and you see Trump go into Rikers on ridiculous charges, right, then you're not going to want to buy the bonds.
That's unbelievable. Kevin, what a great point. Meanwhile, we've got all of this fighting and protesting about the Israel-Hamas war. And, of course, it happened again yesterday. There were protesters at Hunter College in Manhattan. They marched up to the Met for the Met Gala. Your son is at Columbia about to graduate. They canceled the graduation.
Graduate.
Yeah, so how are you feeling about that?
Yeah, I'm very angry. They stupidly canceled freshman year. And so these kids didn't have a freshman year, and now they're canceling their commencement. And I think that the president that would do that is monstrous. That person needs to go. And I can see a revolt amongst the parents happening. I'm in a Facebook parents work group, and my goodness, everybody's ready to launch a lawsuit, seek an injunction. I mean, it's a real mess for Columbia.
You're going to sue Columbia?
I can't say that I am, but I'm hoping that there's some lawyer who'll do it pro bono in the parents group.
That's unbelievable. Kevin, it's great to have you.
Great to have you, too.
Best wishes to your son.
Oh, thank you.
After graduation.
Graduation.
All right, Kevin Hassett joining us.